joined today by James Liu, CEO and founder of Clearnomics. James, great to have you here.
Thanks for having me, John.
2019, James, I'd love to hear your thoughts as we look back at a great year in the stock market. We had several all-time highs. What are some of the key takeaways in your mind that you're talking to clients about?
Well, John, 2019 was an extraordinary year for markets. Investment returns across asset classes, across different investment strategies, all generally performed really well. You take a look at the US stock market, it was up about 30% last year. International markets, both developed markets and emerging markets, did really well.
Great. Now that 2020 is underway, what are the specific areas of focus that you're paying attention to? What are you talking to clients about for the year ahead?
Yeah, so now that we're starting 2020, it's really interesting. We are in the longest economic cycle in history. And sometimes it's important to stop and smell the roses and realize we are about to hit the 11th anniversary of this economic cycle. When you look at history, the longest before this was in the 1990s, which was 10 years in length. And so we've basically blown right past that former record.
Anything that you're worried about for the year ahead? Anything that we should be talking to MoneyLion investors about?
Well, John, we're only a few weeks into 2020, and already there are these big headlines that investors are worried about. There's geopolitical risk coming out of Iran. There's public health issues in southern China. There's a presidential election coming up as well. And what we normally tell investors is that it's not unusual to have these types of big headlines. What's important is to stay invested and not be distracted by what's happening there.
That's great guidance. One specific thing on the topic of presidential elections. Can you give some context for our investors on what's happened historically in years of a presidential election?
Presidential elections, we think, are incredibly important, especially for those of us who are citizens, taxpayers, voters, and those of us who live in the US. From an investment standpoint, the story is actually a little bit different. Historically speaking, asset class returns and stock market returns can be quite positive both in election years and non-election years. And so for those who are worried that maybe we'll see a negative year from the market because of the election or even a sideways year, that is generally not what we've seen on average for US stocks. And so although you might have these headlines about who maybe the candidates are or who might actually get elected in the end, it's important to stay invested because if the economy is doing well, then investment returns can do well also. We sometimes say that investing for the long run is like going on a long road trip. And what matters is continuing to move toward your destination and having that portfolio that can basically withstand a lot of the roadblocks and speed bumps that you might face. And so, although you might see these headlines in the news, it's important to stay invested throughout those periods.
That's great guidance. James, this has been great. Thank you so much.
Thanks a lot, John.